Ladies and gentlemen, welcome back to the channel. Rezolve AI Stock is back, at least back in the green. Following Friday's sell-off, the stock was down about 10% in regular trading, but then the stock fell a lot in after hours. It actually hit a low of $4.05 per share. Now, what happened today is pre-market, the stock hit a high of $5.70 per share. So we've seen a lot of volatility recently. The stock is currently at $5.25 per share. We will get you caught up to speed in what happened, in after hours on Friday, why the stock dropped so much, why it recovered so much from that $4.05 low. If I'm buying the stock here, what my thoughts are around the stock, what my position currently is in the stock. As you know, in Friday and after hours, I did purchase 1,000 more shares of Rezolve. And, if markets get worse from here, if the stock goes back into the fours, I'm going to be looking to buy a bunch more. Now, we're also going to get into your broader market headlines today. Okay. What's going on with U.S.-China trade relations? Are things getting better? Are they getting worse? Are they not changing? We'll let you in on the latest. Now, if you look at the S&P, if you look at the broader markets, they're moving higher today. S&P is up 1.5% at the time of recording this video, but it's still very much a fluid situation that is subject to change on little to no warning. So we're going to give you the latest on this market as well from a broader macro perspective. Hit the like button and subscribe to the channel if you have not done so already. Check that link out down below in the description of today's episode. If you want to come join the trading community, okay? What we do is we go out and find high quality AI, robotics, energy, gene editing, quantum companies, and we want to be early to these investments. We want to take decisive positions while these companies are in the early stages before Wall Street uncovers what the opportunity is. That's why we were early to Rezolve. We're basically early to everything with this strategy, and we have a lot of stocks right now that we are excited about that go far beyond just Rezolve. So if you want to come join us, check that link out down below in the description of today's episode. With that said, ladies and gentlemen, let's get started. Okay, so let me give you a little bit of a backstory of what's happened recently for Rezolve. So Rezolve purchased 2 companies last week. Now, up until they did a press release on this, we had no idea what they paid. Now, the company has recently raised about $200 million in cash, in private placements, okay? So Wall Street was a little nervous at the middle part of last week that the company spent that money. Well, come to find out, the company sold 1 million shares on the markets for roughly $6 million, and they spent $10 million in cash. Now, the company had $230 million in cash on their balance sheet, so they essentially acquire these assets for dirt cheap, if we can use those words. So the stock recovered a bit, and then what happened on Friday? Well, we had the China tariff trade debacle. The stock before that was actually about to break into the $6 level again, but then the announcement from Trump came out, and it was basically downhill from that point throughout the rest of the day for the broader markets and for Rezolve. It was no different. Well, what happened on Friday was a massive decline. The stock was down another 20% in after hours, and really was only down for about 10 minutes. Wall Street got this wrong for about 10 minutes. That doesn't happen all of the time. That's why I went out and bought 1,000 more shares in the stock. Well, what's happening today, the first trading day after Wall Street realized they were wrong, the stock is up 2.44% today, but the stock hit a high of $5.70. Currently, the stock is $5.26. Now, what happened on Friday was actually simple, and we'll circle back. I want to show you guys my position and all of that in just a moment. But what the news was on Friday was Rezolve AI announced a new shareholder transfer to a new global institutional investor. So basically what happened is this, Deep Sea Crow Limited, a shareholder associated with the estate of the late John Wagner and Rezolve chairman and CEO Dan Wagner, transferred 10.6 million ordinary shares of Rezolve AI to a new leading global long hold fundamentals driven institutional investor. So from my understanding, what happened is they transferred the shares. They basically did a private placement to transfer this insider position to an institutional investor. Okay, so they basically said, hey, I have 10 million shares of Rezolve. Do you want to buy them at $5 a share or $5.50 per share, whatever that number is? They said, yep, sure, great. They transferred the shares, and, well, this, Deep Sea Crow Limited got the money from that. Now, from what we understand, it's just to settle the estate of John Wagner that has nothing to do with the business, blah, blah, blah. But Wall Street initially took that as dilution or something like dilution Friday and after hours. And that's what caused the stock to fall so much. But then Wall Street is, realizing today, oh, wait, again, that wasn't dilution. And we realized that pretty fast afterwards. Again, the stock recovered all of that decline in short order. Now, I think personally at this stage, you are one big positive catalyst away from a massive rally in the stock. The sentiment has completely reset. People are no longer ultra bullish in the stock, although following Rezolve's earnings, it's safe to say you should be. I mean, from when I bought the company, you were trading at about 10 times sales, okay? Today, the stock is trading at about 3 times next year's projected sales. 3 times. It is 3 times cheaper today than when I first bought the stock, around $2.50 or so. Yeah. Wall Street is getting this one way wrong. And when the valuation is so depressed, like in the case of Rezolve, it doesn't take a lot of good news to send the stock dramatically higher. Now, we actually don't have a press release today, which kind of surprising if you know Rezolve. Rezolve likes to put out a lot of press releases. Let's double check before I say that on the record. And there is no press releases today. So maybe they're dialing that back a little bit, which honestly could be good for shareholders. We don't have to know about every little thing, okay? Now, I personally like that the company keeps you very informed. I like that, but it doesn't seem like Wall Street likes that, okay? When there's just so much news to process. But if we hear about like a new contract or something, that is really good, the stock has a long way to go to the upside. From a valuation perspective, this thing is dirt cheap. For an AI company trading at 3 times next year's sales, expected to grow hundreds of percents next year and hundreds of percents per year into the future, I mean, come on now. Rezolve is the best risk-reward AI stock on the markets today, hands down. That is why I have such a large position in Rezolve. In this portfolio, market value is currently about $74,000. I'm up 78%, up $32,349. Average cost $2.96. Currently own 14,000 shares. I also have these Rezolve 250 calls expiring February 20th, 2025. 15 of them still. There's no reason for me to sell these if the markets are just going to get the valuation so wrong, right? I'm essentially betting right now a lot of money on the markets are getting the valuation wrong with Rezolve. Rezolve should not be trading at 3 times next year's sales, growing at hundreds of percents in a total addressable market that is many of hundreds of billions of dollars. The valuation is wrong. The markets are wrong on Rezolve. That's the simple fact. Now, that's my opinion, obviously. That's why I putting my money where my mouth is. Okay, talk is cheap, but where are you putting your money? That's why I like to show my positions. It's not that you should follow me. If I don't sell, you shouldn't sell, anything like that. It's simply because I say bullish shit and I have the position to back it up. Now, in this portfolio, I have about $68,500 invested in the stock. Unrealized return, $28,263, up 70.1%. Average cost basis, $3.10 a share, invested for 115 days. Current quantity, 13,000 shares. So, when you go ahead and add up all the shares that I have, it is 30,800 shares worth of exposure. The stock is currently at $5.28. That means I have almost $163,000 invested in the stock. The company today is at a $1.7 billion valuation. Okay? So, with 500 million in ARR for next year, it should be trading at least 10 times that number. So that's a $5 billion market cap company divided by a $1.7 billion market cap. The stock should be today, bare minimum, $15.52 per share. Now that's bare minimum. That's 10 times price to sales. There are companies that are trading at 20, 30, 40, 50, 100 times sales. Again, let alone 3. That's why I say the risk reward for Rezolve looks so great, because there's nothing else like Rezolve on this market from a valuation perspective. If you want to give this a 20 times sales projected for 2025, and as we get closer to 2026, I think you're going to see Wall Street really start to reflect these numbers that we're talking about, okay? But 20 times sales on $500 million is a $10 billion market cap. Divided by 1.7 billion is 5.88x higher. Well, times that by $2 or $5.27, that's a $31 stock. Okay, these are the kind of numbers that I think we are going to be hitting next year in 2026. That's over 500% return from here. That's why I have so much money in Rezolve, and that's why I feel so comfortable investing so much money in Rezolve. Because, again, risk reward, the stock is pricing in a lot of bad shit. The sentiment is not great at this point, but the upside could be massive. Go look on StockTwits at Rezolve. You could see sentiment is bearish today at 43. Message volume is low at 43, and participation ratio is high at 56. So people are just, not that bullish right now. And that's actually a good thing if you're, a buyer looking to make some serious money. Also think that this stock really needs some mainstream attention, okay? Once you start to get a JP Morgan or Morgan Stanley or Wells Fargo or some of these other larger firms investing or starting to cover the stock, a lot of them do have positions in Rezolve. Their 13F filing was basically all green. But once they start to give price targets and cover the company in more depth, or if NVIDIA takes a stake, or, there's a partnership or something that gets, retail investors engaged in the company, that's what you need right now. The company has all of the pieces together for a very large rally. You just need people to know about the company. People just don't know about Rezolve. And that's part of Rezolve's problem right now. With that said, let me know your position in Rezolve down below in the comment section. Are you buying here? Are you holding tight? What are you doing? But let's get into a broader market update, some of your biggest news today, and the developing trade situation between the US and China. First and foremost, let's start with a broader market update, okay? Because Tesla can have all of the best news possible. If markets are under pressure, it's not going to matter like we seen on Friday. Now, there is a lot of big news today for Tesla. There's price target increases. There's analyst coverage that is being initiated on the stock. There's a planned ramp for Q4 production in China, okay, suggesting really good demand. But first, let's start here. China issues implementation rules on port fees on U.S. ships. China exempts China-made ships owned by U.S. companies from port fees. U.S. Treasury Secretary Besson on China trade says, quote, "We have aggressively pushed back against China's export controls. This was a provocative move." He says, quote, "There was substantial communication over the weekend. Quote, there will be lots of staff level meetings. They are neither going to command nor control us. We've already been in touch with allies and are meeting with them this week. Quote, this is China versus the world. Quote, we won't let China export restrictions go on. Quote, we expect support from India and others. We believe China is open to discussion on this. If not, we have substantial levers we can pull. And quote, we could move more aggressively than China has. So, some positive sounding headlines, like there has been communication over the weekend, some less positive sounding headlines. And I still think this is a very fluid situation. Markets today are obviously reacting well to the comments that Trump made last night that essentially don't worry about China. China has a great and strong leader, and he'll come to his senses and they'll figure things out, is essentially what the markets got out of Trump's comments last night. You could see the VIX is down 11% today. The Russell 2000 is up 2.3%. NASDAQ is up 2.13%. S&P 500 is up 1.62%. And the Dow is up 1.37%. So a strong market across the board. Donald Trump says today, Dogan is a tough cookie, but he's my friend. This is the president or leader of Turkey. Trump says, I intend to be an effort to rebuild Gaza. We have weapons that nobody has ever dreamt of. I hope we never have to use them. India is holding trade talks with the U.S. this week and is looking to buy more energy and gas from the U.S., per Reuters. U.S. Treasury Secretary Besson has said that the China-U.S. relationship is good and the new 100% tariffs, quote, do not have to happen, per CNBC. So, some of these comments are getting markets excited, but again, it's still a one-person driven market. It's still a headline-driven market with whatever Trump says. So if Trump comes out and says some crazy shit, stocks are not going to like that. And there's going to, this rally's going to be short-lived. And I think Wall Street wants, more updates. So we'll see if we get them. Trump says, I would love to lift the Iran sanctions if they talk. Morgan Stanley says U.S.-China trade tensions seen as tactical and not lasting. Morgan Stanley says recent U.S.-China trade moves, including rare earth export curbs and tariff threats, are part of tactical escalation, not a lasting split. A full trade decoupling is unlikely, and both sides are expected to ease tensions before key summits. The bank sees short-term volatility rather than structural disruption. Now, we will circle back to some other news and commentary from analysts and investment firms. But that is an update on the geopolitical climate, the trade climate between the U.S. and China. It seems like things are getting a little bit better, but we haven't heard much from China. We haven't heard steps to actually not have the tariffs put into effect on November 1st. So it's still very much a wild card, and you still need to be prepared for anything to happen here. Expect consumer goods sales to stay weak. says Morgan Stanley expects another weak quarter for consumer packaged goods, citing soft U.S. demand and slowing global sales. Analysts see sluggish growth persisting into Q4, with only modest improvements in 2026 from tariff-driven price hikes. They warn that higher prices could strain low and middle income consumers and keep growth below trend. Scott Bessent said today the U.S. government shutdown is starting to affect the U.S. economy. OpenAI and Broadcom plan custom data center chips for 2026. So OpenAI striking more deals. That just shows the AI market is alive and well. Here you can see a pretty interesting chart per the Wall Street Journal that says investment in AI and internet as a percentage of GDP. So AI is far outpacing the internet at the same life cycle of, versus the internet, right? Which doesn't exactly mean anything. It just shows people are going all in on AI. Bessent says working level talks with China this week. Per The Atlantic today, they say the U.S. government shutdown could lead the country into recession. I don't buy this. It's really not a recession catalyst, but it wouldn't surprise me if more people start to say things like this. Now, the Pentagon announced today that they are buying $500 million worth of cobalt, $245 million of antimony, and $100 million of tantalum. The CNN Fear and Greed Index today is coming in at 33, so there's plenty of room for sentiment to get more bullish here. Market momentum is fear, stock price strength is neutral, stock price breadth, extreme fear, put in call options, greed, market volatility, extreme fear, safe haven demand is fear, and junk bond demand in extreme fear. The AI Investor Sentiment Survey, the last one we had was last Thursday before all of this tariff, debacle. You had bullish investors at 45.9%, neutral investors at 18.5%, and bearish investors still elevated at 35.6%. Now, Fed Paulson today, he must be a new Fed governor because this is just a name we're not used to seeing, says, I don't see tariffs causing sustained inflation. Fed Paulson signals support for 2 more 25 basis point cuts in 2025. And he says, I see current monetary policy as modestly restrictive. And according to the Fed Rate Monitor tool, the odds for a rate cut October 29th, 99.3% in favor of one rate cut. There is almost a 1% chance of a 50 basis point rate cut. For December 10th, you're pricing in an 87.4% chance of another rate cut and about a 1% chance of 75 basis points worth of cuts between now and December. And for January, it's really split here. There's a 48.1% chance that we will pause in January, and there's a 45.8% chance that we'll get another rate cut. So ladies and gentlemen, let me know your thoughts on all of this down below in the comment section. Hit the like button as well as subscribe to the channel if you have not done so already. Check out that link down below in the description of this video. Come join us. Come get involved in the greatest trading community in the entire world. But with that said, have a great rest of your day, and I will see you in the next one. And we will be covering a new stock at 8 p.m. Eastern Standard Time tonight. And it's an exciting one. So look forward to you guys joining us. But that's it. Have a great night, and I will see you in the next one.